Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 5th, 2025, and we're diving into SmartRent's latest earnings report for the fourth quarter and full year of 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. SmartRent is a key player in the smart communities and operations solutions space, and their latest report provides a lot to unpack.
Revenue and profitability overview. Let's start with the top line. SmartRent reported a total revenue of $35.4 million for the fourth quarter, which is a significant 41% decrease compared to the same period last year. John, what are the main factors behind this decline?
The decline in revenue is primarily due to lower volumes in units shipped and new units deployed, which were impacted by the underperformance of their channel partner program. Additionally, the company is transitioning away from hardware sales, which has historically been a major revenue driver.
And how about profitability? The net loss increased to $11.4 million in Q4. What does this tell us about SmartRent's financial health?
While the net loss has widened, it's important to note that the company is in a transition phase, focusing on becoming a SaaS-first company. The adjusted EBITDA for the quarter was negative $7.4 million, down from a positive $743,000 last year, indicating the challenges they face in this transition.
SaaS revenue growth and strategic shift. Despite the overall revenue decline, SmartRent's SaaS revenue grew by 17% in the fourth quarter. Can you elaborate on this growth, John?
Absolutely. The increase in SaaS revenue is a positive sign, reflecting improvements in SaaS ARPU and units deployed. The annual recurring revenue also rose to $54.4 million, showcasing the company's successful shift towards a more sustainable subscription-based model.
It seems like SmartRent is making a strategic pivot. How do you see this impacting their future performance?
The strategic shift towards SaaS is crucial for long-term growth. By focusing on high-margin SaaS offerings, SmartRent is positioning itself to capitalize on recurring revenue streams, which should enhance profitability over time.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. SmartRent's gross margin improved to 28.7% in Q4. What drove this improvement?
The improvement in gross margin is primarily due to changes in revenue mix and cost management. The company has been focusing on operational efficiencies, which is reflected in the 1,360 basis point increase in full-year gross margin to 34.5%.
With a strong cash position and no debt, how is SmartRent leveraging its financial resources?
SmartRent is in a solid financial position with $142 million in cash and no debt. They've been actively repurchasing shares, with 3 million shares bought back in Q4, indicating confidence in their long-term strategy and value creation for shareholders.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 94 but SmartRent reported an actual EPS of 6 cents. What does this miss indicate, John?
This EPS miss highlights the challenges SmartRent is facing during its transition to a SaaS-first model. While the short-term financials are under pressure, the focus remains on long-term strategic goals, which are expected to drive future profitability.
Given this context, how should investors interpret these results?
Investors should view this as a transitional phase. The company's strategic pivot towards SaaS is promising, but it will take time to fully realize the benefits. Patience will be key as SmartRent continues to execute its long-term vision.
Key takeaways. In summary, SmartRent is navigating a challenging but necessary transition towards a SaaS-first business model. While the short-term financials show some strain, the long-term prospects appear promising. Key takeaways include a 26% decline in full-year revenue, an adjusted EPS of 6 cents, and a strong cash position of $142.5 million with no debt. Thank you for joining us, John.
Thank you for having me. It's an exciting time for SmartRent, and I'm looking forward to seeing how they execute their strategic vision.
Thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on SmartRent's performance in the comments below. Until next time,